Good morning, everybody. It's a pleasure to be here. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. It's the second day of August, and we're going to go as usual to check through the markets, figure out what the overall sentiment is, if it provides opportunities, what the big stories are, how they're affecting asset prices, if they provide opportunities, and then how we can take advantage of it. But please, like always, do remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or an investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall environment is a risk of flow across board. Our markets are leaning risk of, are showing risk of flows, and it's clearly what we are seeing, across different asset classes. And there's a couple of reasons for that. So let's quickly, take a dive into it. Now, I had this written down earlier. I said double whammy for the Australian dollar after the Reserve Bank of Australia, as well as even potential US-China tensions, right? Markets are trading risk off in today's session as tensions increase over US House Speaker's potential visit to Taiwan. Um, there is talk that she's about to visit Taiwan today later in the evening, right? So you know, there is also that concern. And then China has strongly opposed this move and has been threatening military actions, which clearly further deteriorates, the US-China, relationship. Now, that in itself, when the two biggest dogs in the yard, when the two largest economies in the world go knock on head to head, is clearly a bad sign, clearly a bad input, for overall sentiment, for global trade, global growth. And clearly that's a major, major worry for risk assets generally. Now, equities have since made their way lower in line with this negative development that we're seeing so far. You look at US 500, it's down about 0.58%. Commodities are also down as well, right? In line with overall risk of flow that we're having and even growth concerns. And then you look at even bond yields lower across board, and then even measures of volatility are high. So clearly all this points to a more risk of environment. Now, what happened with RBA? Now, the Reserve Bank of Australia had their meeting earlier today where they basically hiked interest rate by 50 basis points as expected. Now, but just aside that, because markets are more or always latch onto, you know, deviation from expectations more than what eventually just happened or what just happened, right? So apart from just the hike, we're expecting that's not a surprise. What's more important is the RBA basically took a page out of the Fed's book by saying that going forward, the parts or the pace of rate hike or the part of rate decisions will be based on data going forward. Stressing some headwinds for the economy apart from even rising inflation and even some floods in New Zealand at the time as a major headwind, right? So there was also that. And then basically they just implied that it's possible we get a slower pace of rate hikes going forward instead of, presetting the rate hikes going forward. So before it was more like we're going to hike by so and so, right? There was that confidence in terms of the hike. Now that's no longer in the picture. And it's more, let's see how things go. Then based on how it develops, so based on what happens, we would now think about hiking or not to hike or reduce or slow down the pace of the hikes. Now, clearly that was taken as a dovish sign or as a less hawkish meeting from the RBA, and the Aussie fell across board bottom of the majors. Now, if you look at the risk of flow from that side, right, you look at the potential US-China tensions as well, right, also that, and you also look at even the less hawkish RBA, all of that has put pressure on the Australian dollar this morning. And in itself, like always, it has dragged its sister, its antipodian counterpart, the New Zealand dollar, down as well. On the other hand, safe havens are leading the pack. JPY is strongest. It's been enjoying bout of inflow right from the FOMC meeting on Wednesday last week, and that has continued even yesterday, Monday, and then today as well. Even further support with the risk of flows that we have, and then the dollar is also not far behind, the JPY in terms of strength. After enduring a rough couple of days. So there's also that you look at the likes of AUD JPY is down about 2% already today, pairing NZD JPY down almost 1.5% today as well. Today, AUD USD also down heavily, AUD JPY down heavily. So basically, looking to pair strengths and weaknesses are a very good way to look at it. Now, haven't fallen so much I think pullbacks would be a better way to look at this, but clearly it's one on our radar. Now, with only the Fed's member, this Evans is a dove, on the wires today, right? It will be interesting for us to hear what he has to say, because if he comes out, stressing the inflation worries and saying that the Fed needs to hike, that would also be another positive for the dollar. So there's that to pay attention to. But apart from that, there's basically not much on the calendar, right? Not so much. Yes, we have Joe's reports, private job openings, but we'll look to that as well. But I think NFE would be a very, very major, 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 major focus for the week. It's for a while now, the JOLT report has really not, been flown in terms of correlations with the NFP. It has not really been a good indication for what NFP would look like. So I think there'll be lesser focus on that. But more importantly, focus will remain on the development of the Sino-US, tension. And if it escalates, right, AUD being a very major benefactor from China in terms of the trade relationship will suffer heavily, dragging NZD alongside, risk assets generally alongside, while Japanese yen should continue to benefit alongside other safe havens. Now, quickly looking across, across board, you look at equities now a little bit down across board. They've not really shown that momentum to the downside, although still down all week, right? Especially in today's session, about 0.1% as well today. You look at other US equity bourses as well, also weak as well. The VIX is elevated, right? So clearly that also shows that stress that we're seeing above the 20 level. So clearly that's another stress that we're seeing. The dollar index continues to push higher after bad, rough couple of days, right? So this reprieve is there. We're not getting carried away just yet. But in terms of the risk of the we're seeing, that's a positive for the Australian um for the US dollar rather. You look at oil prices as well. Now, this one's yes, a little bit lower today, but we've not really seen so much in terms of continuation. I think the bigger driver for oil prices right now would be, the supply situation when it comes to, OPEC. I think OPEC meeting as well, not far. OPEC as well as general or Russia. So I think that's a major, major, major driver for this. But clearly, risk off is not a positive for oil prices as well. Now, let's just run over to the currency space, which is where I'm more interested. I'm looking at AUD/JPY. Today already, it's falling heavily already, down near 2%, right? Breaking below, continuing from the solid downside we've had from middle of last week, basically, right? From the FOMC meeting, I think, against JPY. From the FOMC meeting, JPY's trend continued, and that has continued to see, strong, strong, strong downside for JPY crosses. Now, so far today is down over 200 pips already, right? Okay, around 200 pips already so far today. So there's also that to pay attention to. It's already smashed the ATR by about 70 pips thereabout. So that's also stretched. Apart from that, you look at where we are trading right now. I mean, the downside has basically been in a straight line, consecutive bear candles over the last 5 or 6 um last couple of sessions. Let's say last couple of sessions. Now, where we're trading right now is also an interesting level of support. You look at, where we are right now. Let's just make this a bit cleaner. All right, so the lows. All right, so this low going back to I think 26th of April thereabouts, and that's where we're trading very, very close to, in today's session. So trying to sell at these levels would not be a very prudent idea. Now, what are the things that we can look to? Now, if you can get a rotation back towards, let's say, if you can get a rotation back towards, I think this round number, the lows of Asian session around the 91.5, I think that would be an interesting level in terms of looking for further weakness on this particular pair, right? And then looking to retarget this overall target here, and that should still, still be quite good enough. But trying to sell at these low levels would not be good enough. If the tensions continue, the risk of flows continue, if equities continue to make lower, I think this rotation back here would be an interesting one to look out for the downside on this one. You want to look at something like NZD/JPY as well. Now, in this case, similar downside that we're seeing as well in today's session, solid over 1% already down on the day. In this case, we already had a rotation back or a retest, right, of this key round number around it's 2.5. That could also be interesting, but let's see, is there any key area of support where we are currently trading at? Now, we've just cleared through, the highs going back to middle of October, right? Previous resistance, right? And now we have broken through it. So I think that could also be a perfect level to look out for, since that we've broken through a retest. This would have been a better one, but if we can get another retest, that would not be a bad idea. Looking for the downside as well on this particular pair. Now, I think there's still some room to the downside, right? So there's also that explanation. So in line with this. Now, if bond yields, US 10-year bond yields continue to make its way lower, I think that could also help this push lower even some more. I think if you also look at the moving averages, I think they also help us, right? So I think if you can get anything, like somebody that doesn't want to wait for this and feels like this is so small, we can also look to this overall higher level here. It's 3.0, I think very close to the lows from yesterday. I think that could also be another one to look out for in today's session. Now, you want to also look at, let's say, USD. Let's look at the USD pairs as well. AUD, USD, yes, solid downside that we've seen so far today. It's moved a lot already. So trying to sell at the lows might not be the best idea, especially that we are, trading around these key overall, key support levels, resistance levels. So I mean, you don't want to be selling around levels like this. Now, if we would now look at, let's say, just looking at today's movement alone, if you can get, say, a rotation, let's just see how much. Now, if you can get something, higher for this particular pair, I think anything back towards this 38.2. Now, this key round number here would be interesting, 23.6. I think that's a closer one to us. I think that will provide us a better or cleaner, level to look out for. Now, if you look at this level as well, let's just pick it from here, even though we can extend it, but we can look around here. This key round number, 0.695, just quite in the middle of the pullback. So I think the fibs are not working here. But, looking at that level as well is also an interesting one to look out for in terms of a rotation back, looking to retarget levels like this. And finally, NZD USD also down quite a margin already, right? Also down quite a margin already, pushed lower. Right now, we're currently trading at this overhead level here. Right, so I think at this levels, clearly it wouldn't be the best idea. But a rotation back towards this key round number 0.6300 in terms of previous highs, going back to 22nd of July, could be interesting looking to retarget areas like this. So generally, it's more about pairing strength versus weakness, more about looking for the risk off to continue and looking to sell the likes of AUD, NZD, particularly AUD, and buy the likes of US JPY, particularly the JPY in today's session. On the calendar today, it's basically a light one. There's so not much going on. Yes, Evans, yes, on the wires, but apart from that, there's no much. So it's basically going to be about Pelosi's Taiwan visit, right? How that affects sentiment going forward. If she eventually goes, that would really be a big escalation in tension and a big off for risk assets. And then we need to see how, Evans' speech also helps and plays out in the day ahead. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you and do enjoy the rest of your trading session. Bye for now.